Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Thursday, March the 19th. How is everybody doing today? So glad to have you here. And if you are here, drop your hi in the chat, say hello, and let's do some trading together. What we're going to do here on this stream is we're going to take some live trades together if we get the right setups. We are going to analyze the market together, and I'm going to answer any questions or comments you all might have. So traders of all levels are welcome. I especially love working with and helping new traders. So don't be afraid to drop your questions in the chat. There are no dumb questions. There are no newbie questions. I'm happy to help you all through any questions you have at whatever level you're at. I've been trading for over 20 years. This is what I do for a living. This is my living. And I am a licensed stockbroker with my Series 7. So what I do here is I day trade options on the SPY. So I'm looking for what we call zero DTE, meaning 0 days to expiration. I'm trading today's expiration almost always, unless we get really close to the end of the day. I am trading today's expirations. So that is kind of the style. I'm a scalper, meaning that I'm going to get in and out of these options really quickly because zero DTEs can be risky. They expire worthless at the end of the day, so you don't want to get stuck in those. So the idea is you want in and out quickly. You want to make your profit and get out quickly too. All right. So it looks like Freaky Turkey is here. Good morning. Good to see you. Craig Bliss is here. Good morning. Good to see you guys. Thanks for saying hi. Thanks for joining. All right. What we are getting at this moment is, guess what? What do we normally get at this time of the morning? Range. This is a range right here. So let's take a look at the charts, what we've had so far this morning, where we've been, where we're going, if we can figure that out. So we had a pretty significant overnight drop. That was significant. And it brought us down. Roger, good morning. Ranging day. So far, Roger, yes, it is. Brought us down through the 200-day moving average. Now, you guys know we've been talking on this channel about the significance of the 200. It's a big deal, guys. It's a big deal. So let's take a look at our daily chart, and I'll show you exactly where we're sitting and exactly where we opened and exactly where our 200 is. All right, let's get over there to our daily right here. All right. So take a look at this chart. Looking a bit like a waterfall, isn't it? Certainly it is to me. We have a high that we got here at the end of January. This is our high, 7,002 on the SPX. And we have since just rolled over. That's what's happened here. We've rolled over. So we've come all the way down to this blue turquoise line. This is our 200-day moving average. Institutions pay attention to this line. Here's our 100. We beat that a good ways back. And here's our 200. We've just broken that. So institutions pay special attention to these levels. Excuse me, I am in a trade. I'm so sorry if I'm getting a little bit distracted here. I am out at a win. That was a call. I was in that before I joined you all. So that was, I'm glad to get out of that one. It was certainly ranging on me for quite some time. So I had to take the opportunity to jump out there. All right. So the 100-day moving average is also what trade? Good job. I was in a call, Roger, and it was not looking pretty there for a hot minute. You can see by this range. So it didn't look real pretty, but I got in, I think, over here toward this top. Right when the MACD rolled over, we were pretty close to the top already. So I was stuck in this little sideways downward slog. And then I jumped out you saw where I jumped out. So got just a tiny little win there, and I'm okay with that. I was down, I think, over 30% at one point, which I don't like. Okay, so 100-day moving average, institutionally, very important. 200-day moving average, institutionally, even more important. This tends to be kind of a death knell for stocks. When we lose the 200, institutions sell, period. That is the way it works. It's kind of almost an automatic trigger in some algorithms that we lose the 200, boom, it's not a pretty picture. Now, that doesn't mean that we do lose the 200 completely and totally. We are trying real hard today. Look at this candle. Let me zoom in for you. Look at that reversal. Okay, then. So take a look. Here's our 200 sitting right at 66.18 is where it's sitting on the SPX. So what happened yesterday is we got this close. Where's our close? Right on it, right? It held it. And then today we broke down through it. That's bearish, super bearish. But the bulls have really tried to pull this up today. So we were down as low as 66.57 was our low. And we're sitting at 65.57, forgive me. We're sitting at 65.95. So, we've come up a solid 30 plus points from this low. We are making a green candle, meaning that we are moving up from our open, and we are trying to close this gap, potentially trying to close this gap. However, we are in a pretty negative regime. Hold on a minute. What just happened here? What? Why is it showing? Oh my God, I bought another one. That's great. Okay. So basically, we are in a negative gamma regime. That's a problem for bulls. That's a problem, meaning that dealer hedging is sitting on the negative side, meaning that dealers are feeling more negative about the market. So when we're sitting in negative gamma, we are hedging. We are preparing for downward moves. That's what the dealers are doing. So we're watching this fight, right, between the bulls and the bears. They're trying real hard to pull this up. Are we going to come up and fill this gap? It is possible. It is possible that happens. The other thing that's happening today is options expiration. So we're getting our expirations and in many different products. They call it quad witching. So options are expiring, meaning that big money is going to have to move their positions off of expiring options and roll them into options with dates farther out. Okay, so Roger, Gavilan, good morning. Good morning, Gavilan. Roger, a trader explaining to boss, while the market dropped below the 200 in a very strong bear market, so while everyone in their right mind was selling, I thought it'd be a good time to buy cheap. It's true, Roger, and it's not actually a bad idea. Warren Buffett always said, be greedy when others are fearful and be fearful when others are greedy. And I think he was very wise in some of the things he said. He also said, when there's blood in the streets, it is time to buy. I would not say that there's blood in the streets right now. I don't see that. We are certainly in a negative regime, but there's not blood in the streets yet, because technically we're only down 400 points off the top. So that puts us at just a little over 5% down. That's not horrible. That's not a bad thing. In fact, we usually get a 10% correction every once or twice a year. That's pretty standard, pretty healthy market behavior to see a 10% correction. We haven't even seen that yet. It's my thinking that we may see a bear market this year, meaning that we could come down below 20% off of our all-time high. I think that is a possibility. So while we are feeling negative here, I wouldn't say there's blood in the streets just yet. All right, so we are kind of getting some buy signals here, but we are fairly close to a short-term top. So I'm not really ready to jump in on that, although this bar is giving us some increased volume. We have been a bit range bound here with a slight bias to the upside. 27 points. They really are trying to fill that gap. And our VIX is coming down a little bit. We're sitting at 25. Still elevated for the VIX, but down from what it was. We were up over 27 today at the open. All right, looks like another little push here. Let's see what this candle gives us. I'm going to move back to my futures chart, the ES. You got the main idea on the daily chart, right? We gapped below the 200 and bulls are trying pretty hard to pull it out. These candles are challenging to trade. They're doing a lot of this herky-jerky, up and down movement, which it's common, but they're frustrating to trade, aren't they? All right. All right, his ox contrarian trade has paid off handsomely this past week. Yeah, he is the Oracle of Omaha for good reason. That's his nickname. They say he still lives in the house he bought with his wife many, many, many years ago. Very modest home. He lives a very modest life. Certainly one of the great investors of our time. All right, so I'm just waiting to see if we can get this to turn around here. Like I said, I was in the calls, so I don't want to play this move again. I want to see it come back down and try and test this VWAP. However, if the goal is to fill this gap, we could just keep climbing. That is, we've only got 21 points to go. This is really common behavior. We've seen it so many times where the market hits a really significant low and then gives us this V-shaped recovery at the open. And what they want to do here is, number one, have retail become their liquidity. That's the name of the game, right? Big money, if they are going to push it higher, they need somebody to sell it, right? So retail jumps in this morning with this huge gap down and sells. And then what does big money do? Well, they take that liquidity and they push it up. And that's exactly the name of the game. All right, sitting at 20 points here below the gap fill. Looking more and more likely. And again, I am open to calls. Like I said, I took one over here. Actually, I think I was over here. But I don't, one of my rules is I don't like to trade the same move twice. I do it sometimes, but it is one of my rules to be careful about trading the same move twice. So right now, what I'm waiting for a trade is either a push back down to the VWAP to trade puts, or a push down and another leg higher to jump in on some calls, or maybe both. So if we were to look at puts, we would be looking at the 659s. We still have some volume growing at the 650 strike on the put side, which is something to be aware of. That volume just is sitting there and growing. And remember, with options expiration, we can see big swings. That is really common. The day before, the day of, we see some swings happening up and down in the market on or around options expiration. All right, I am going to load these 659 puts. I'm not in them. I'm just loading them. All right. I'm going to go ahead and try this put here. I'm in. Punch it. I'm out. Punch it. I believe that's 9%. Let me double check. 193 to 213. So 20, yeah, 10%. That was cool. I like it. Did you guys follow? It was a little bit fast. Getting a tiny little bounce here. That did help a bit for me. Telling you the trading has been brutal, hasn't it? I don't know if it's just me, but it has been tough trading lately. So if you are struggling, do not feel alone. It has been tough. It's been tough to trade these markets for sure. All right, Craig got 10. Nicely done, Craig. Val got 10. Freaky got 28. What the heck, Freaky? Nicely done. Nicely done, Val. You guys have no idea how happy it makes me when you're able to follow and make some money. I love that. That is what it's all about here. Made up for me being in a put at the open. Right, Freaky, you were one, unfortunately, that was part of that whole liquidity, and that's exactly what I was talking about earlier. And you're not alone, Freaky. That is what happens, right? They give us this ridiculous drop overnight. The big money is able to do what they need to do, but retail does not get to trade that unless for some reason you trade futures. I do trade futures, but I had to I had to kind of discipline myself because if you trade futures, it's really hard to keep, for me anyway, to keep a normal lifestyle because they run almost 24/7. You know, I was buried in my charts and in my phone, you know, not doing family meal times, not sleeping, like up all hours of the night watching these trades. It's just, it was too much for me. And I really had to discipline myself to trading mostly just regular hours. But occasionally I will jump in and do some futures trades. I love it. It's great. But my point was big money is able to get their movements done. And if they can't do it, in the futures market, they'll do it in the dark pool market, in the off exchange market. There's a whole there's a whole cesspool going on out there, and these guys, they trade in these off market exchanges. That not even exchange, off exchange. I don't even know what it is. Some sort of electronics, switching station over there that is not inside an exchange, and they don't have to report these trades for up to 24 hours. They can kind of route it through the London, and it's all kinds of weird stuff that they do to avoid their trades being trackable, and avoid their trades moving the market. So this is what I'm saying. Big money has these advantages that we don't have. And if we are not careful, retail is the liquidity for big money. It's just the way it works. It's the way it works. So what we want to do, what I strive to do on this stream, is follow big money. I want to follow in their footsteps. I'm not necessarily trying for contrarian trades, although I will take them. I'm really looking to find the flow and go with it. I've found it's better, more consistent money. So that's the idea. And so Freaky, I am sorry you took a put this morning, but you're not alone. You and a whole bunch of retail traders did that, and I'm sorry about that. All right. Dana, 13%. Dana, I'm so glad. All right. Made up a little bit for a couple of those losses today. Roger, what percent did you make on your overnight put? I think I got 50-ish%, Roger, somewhere in there. Are you talking to me? And how did you know I took an overnight put? Or are you talking to Freaky? Not paying attention, got a call instead of a put. Oh, sorry, Gavilan. Oh, sorry to hear that. All right, we're getting a test of the VWAP here. I know every move you make, Mel. Feeling a little bit like Sting there. Every move you make. Oh, thanks, Roger. It's all about me. It's only all about me when I'm winning, right? It's not so cool when I'm losing. I know how it works. All right, Craig, I only wish. Oh gosh. All right, so we are breaking the VWAP just a bit here. Actually, we're just kind of sitting on it right now. Breaking the VWAP is one of those situations where sometimes I will trade the same move twice. So as we were coming down to the VWAP, I got out, got that 10%. But the, was it 10? Yeah, it was 10. The break of the VWAP could be an exception to the don't play the same move twice rule. And sometimes I will do that. However, if we take a look at what it's been doing at the VWAP here, take a look. It sat here for a good bit of time right here. So from about 10:38 Eastern, roughly 11:02, about 20, 22, 24 minutes, sat right here on the VWAP. And it's kind of been over under. So it's really, in essence, ranging. So this is one situation where I might not trade that break of the VWAP just because of this right here, this behavior right here. And there's our little bounce. So could we trade a call if we break up through the VWAP and get a MACD that's curling up? We could. Let's see what it's going to do here. Let's see if we continue the drop. Yep, there it goes. Okay. Somehow I don't think the bulls are finished. I think they would like to come up and fill this gap. They got real close. 58 is 13 overhead. 30. No, they got closer than that. What's wrong with my math? 58 is 30, 20 overhead. Yes, 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 yes. Okay. Yeah, so we got within about 20 points of filling the gap. And I don't think we're done, honestly. I don't think the bulls are done. They're really trying to hold this up today. However, we're a good bit away from capturing that 200. And again, the 200 is sitting roughly at the same place as the gap fill. Let's take another look at that. Let's see if we've moved. Remember, these moving averages do move. They just move slowly. The 200 moves very slowly. It's 200 days worth of averaging. Looking a bit like a doji here, isn't it? Our daily candle. I like to come out periodically throughout the day and just look at what the daily candle is looking like. It'll give you an idea. It'll give you a zoom out perspective of kind of what's going on here. And of course, what you see here, when you see a doji, that's what the name of this candle is. That means it's got a wick above, a wick below, and a skinny body. This is the body right here, that little skinny part. When you see a doji, what you know automatically is indecision, battle. We're stuck right here in the middle. Bulls can't win, bears can't win. We're stuck in the middle. So that is what a doji is. Remember, for those of you who are beginning, every candle has 4 parts to it. It has a high, a low, an open, and a close. Okay, so the high is the wick, the low is the bottom wick, the open on a green candle is the bottom of the body, the close on a green candle is the top of a body. It's reversed for the red candles. The open is the top of the body, the close is the bottom of the body. All right, getting a push up here through the VWAP. If this MACD rolls up, I might consider calls here again. It is a bit trappy, honestly. If you just look left a little bit, it really is a bit trappy in this zone. So I'm cautious of this zone right here. All right. So again, looking at the daily, let me zoom in real good so we can get an idea of where the gap fill is and where the 200 is. Right here. Here's our 200, 68.18 roughly. It'll keep just tiny little moves up because it's a slow moving average. So it'll keep its trajectory up for a while. Eventually it'll start curving down because of what we've been doing. But right now it's still pushing up. So right now, sitting at 66.18. We are currently trading at 65.84. So we've got, 16 and 18, 24, 34 points overhead. Yeah, 34, 36. Okay, here we go. Getting a little break to the downside. So again, the 200, reclaiming the 200 would be almost the same as a gap fill because you can see the gap. Well, let me go back to explain what a gap fill is. The gap is created when the close of the previous day's candle is different than the open of the current candle. So today's candle opened here at 65.84 roughly. Let's see, 65.83. And yesterday's candle closed at 66.24. That creates this gap. See this air right here in between this body and this body? There's air. That is the gap. To fill the gap, bulls have to come all the way up to yesterday's close. Okay. That's a little higher than our 200, but not by much. So bulls are really going to shoot for that today. It's really important for the bulls to recapture this 200, or we could be in a landslide. So let's zoom out a little bit while we're kind of waiting for this range to unrange. Let's zoom out and look at what has happened the last few times that we have broken the 200. Let's get out here about 5 years. That'll give us the COVID lows, I think. All right, let me zoom way out. So I'm zoomed way, way out here. Look at the last time, guys, we broke the 200. Uh-oh. What? That's not good. That was in April of this year. I think that might have been the tariff or the Japanese yen carry trade. I can't remember which one it was, but it was a pretty rough go, right? Here was our high at 61.47 back in February of 2025. This was our high, basically 61.50. I'm watching this candle here. 61.50. Got some volume on this little down move here. Okay. All right, I kind of like puts here, but the move is old, so I'm not going to take them. It feels like it wants to drop some more, but I'm not going to take puts here. The move feels a little bit old to me, but I do like, I feel like a drop coming. I do. MACD is getting brighter. We broke this recent swing low right here, but I'm not trading it. Okay. 61.50 all the way down to 48. So let's just call it 61 to 48, roughly 13. So 20, solid 20% drop here, right? Big, big, big drop into bear territory. And if you zoom in, let's see what happened when we tested the 200. Let's take a look here. So here's that test of the 200 back in March, actually. Interesting. A year ago, March. That's interesting. Broke the 200 here. And then we got a slide of 1, 2, 3, 4 day slide after we broke the 200. Then they tried really hard to grab it again. And look at what they did. They just climbed over and then whoosh, a big move down. Look at that waterfall. The second time we lost the 200, it was quite the waterfall there, right? So this trade here, they call that the kiss goodbye, right? It comes under, comes back up, kisses the line, and then goes whoosh. This is the kiss goodbye. Breaks the support, comes back up to it, and let's go. So that is what happened the last time we broke the 200. Now, we came back up and reclaimed it here, retested here in May, but bounced from there, and we didn't look back. So the main point here is that this is dangerous territory. This is very dangerous territory. And again, we're only, what did I say? 500 points down from the all-time high. So again, what, 6, 7%. I'm just doing mental math here. Maybe 6% down. It's not that big of a deal. So we could go a lot farther. I am looking at potentially 6,300 would give us a 10% drop. And there's a pretty good support right in here at 6,300. So I think we could see a potential drop down to 6,300. Doesn't have to happen today. It could take days and weeks. We could get a recovery of the 200 and a bounce. We just don't know. We got to watch the charts. We don't know. All right. So that's the big macro picture. Still waiting for this move to do something different. We are touching this recent, almost touching this recent swing low right here. Let's see if we get a bounce here in a minute. Our VIX is 25.79, so down from where it's been. So we've got the VIX kind of doing this lower low kind of thing. See how it's doing this? Made its high right there first thing in the morning. 27.3 was our high of day. We had a 27.5 overnight high, and then kind of this just lower, low, lower high is what the VIX seems to be doing, which is not exactly what we're doing on the index. So it's a little bit off here, because on the index, we're really kind of doing a range. We're not really getting, I guess you could call this a teeny higher high, but not by much. And it's, I guess that's an itty bitty higher high. This is more of a range than it is a trend. So the VIX is acting a little bit differently than the index. So with the VIX kind of giving us this little downward push, we could expect to see the market start to come back up. But again, it's a little out of sync right now. Okay. Another little move down. I'd like to see a bounce from this area. We could trade that. I am going to load up some calls here, but I'm not in them. I'm going to look at the 656 calls. However, I'm really paying attention to the growing volume at the 650 puts. That's really got my attention. That volume continues to grow there. We've got significant open interest there at the 650 put level. So I think we could see a big flush today down to 650. It's possible. It's possible. The next highest, we've got the two highest volumes sitting at 650 and 655 on the SPY. And then we've got some calls sitting at 658 on the call side. I'm going to take another quick look at gamma. We've been in negative gamma all day, which would make sense, right? Because we've got, I mean, we're still pretty down, right? We're still pretty low. Okay, negative gamma has increased since this morning. 3.1 billion in put gamma with only 900 million in call gamma, giving us a negative 2.2 billion in negative net gamma. That is something to pay attention to. All right, Roger, did you say 650 as in 7 points below? What is this? A game of limbo? How low can you go? 650 is what I said. Isn't that wild, Roger? And I've actually kind of been disbelieving a little bit, but it's really been consistently growing at that level. And the gamma is still sitting with the put wall. Well, move the put wall up a little bit to 655, but the put wall earlier was sitting at 650. So right now it's sitting at 655, which is still just a little bit below us. All right, if we come back down through here, I might I don't know if I want to take puts here. We're sitting right at the overnight low. We haven't broken that yet today. On the SPY, we did right at the open, got a little break of the overnight low, but we have not rebroken it yet today. Okay. Really just a big old range right now is what we're looking at. And we're toward the bottom of it, which is why I'd be a little bit leery of puts here. All right, getting some call signals. I do have 656 loaded, but I'm going to load 657 calls. I'm not in them, but by the way, my position size today has been very small. Usually I will tell you to keep your position sizes consistent. But for today, I am using smaller positions just because of the tricky nature of options expiration. We just came off of FOMC. There's so much going on in the markets that I am being very cautious. I'm keeping my position sizes small. Believe it or not, I've still been able to make my goal today, which is really mostly only because I got that overnight put. I did make a little bit of money today, but the overnight put was the one that kind of helped me over the top there. All right, if we break this zone right in here, I will look at puts, but we're really kind of at the bottom of this range, so I'm being careful. And look at the MACD is a little bit tired. It is getting a little tired here. All right, it is. 53. We're right here at the open, right at the bottom of this range. Very tempted for puts here. And there's our MACD trying to pop green. Let's see what we get. VIX is still sitting at 25.8, so a little bit kind of depressed from where it's been. Slowly climbing. 1117. Yeah, right there. Why does everything feel trappy today? Huh? It is. That's why. It is trappy, freaky. I feel you on that. I absolutely feel you on that. It is trappy. Wow, look at oil really blasting up there at 99. That I'm looking at sweet crude. Okay, we're getting a bit of a turn. The MACD's giving us a little green here. Just holding sideways right now. No trade for me just yet. The put looks a little old. The call is not strong. I don't see any strength here. If we come back down, I guess I really want to see us beat this swing low and beat this overnight low before I take any puts. And for a call, let's see if we can get up to this VWAP here. Starting to get some signals. That MACD is still giving us a little green, but it's small. It's not convincing. I'm not feeling it yet. Yesterday afternoon was that one big put slide. It sure was. The second Jeremy Powell opened his mouth, the market was like, oh. And, you know, he tries to stay neutral, but I really do think he wants to get his digs in wherever he can. You know, he wants to, him and Trump have a feud. It's really no secret. And, he knows he's on his way out. He's done at the Federal Reserve in May. So he made sure to say that things weren't looking good, and it was thanks to tariffs and thanks to Iran. And so we will see if the market can pull itself together. But honestly, watching sweet crude here, I am starting to kind of feel this 650 level. Look at how it's just. Let's take a quick look at crude real quick here. His opening words, higher oil will push up inflation. And it's true. He's not lying. He's absolutely telling the truth. Look at crude. Look at crude. Wow. Do you see it? Just hit 100. Ouch. It's jumping. Let me go to a 5-minute. Look at that. I'm going to look at a 15-minute here real quick. Yeah, that's a push. Look at these last two 15-minute candles on crude. We might see the market react. Let me get back over to the SPY. You can see the SPY really kind of just, if you look at the 15-minute, kind of sinking, but it's doing this barcoding right here so far today. Trying real hard to hold this bottom. All right. I'm going to shift over to puts here. I'm going to look at the 657s. Not ready for them yet. We're currently sort of trying to make an upward move here. Okay, which is so true, but the idea that raising interest rates will bring down the price of oil is insane. The wrong knob to turn. Well, I think he was actually saying that the dot plot is showing that they're not real keen on cutting rates. They have basically pulled back to the idea of maybe one more rate cut this year. That the market doesn't like that, but you're right. It is the wrong knob to turn. It's not going to fix anything. Okay. Waiting for a little break here to the downside. I want to see the MACD roll. Hatman is here. Hello. I've really got things conflicting in my brain about this put. I see the lower targets. I see oil coming up. I see the VIX being off just a bit from the market at large, but I'm also seeing a little bit of a bottom here. So I'm very cautious. I'm not in anything right now, just watching. All right. I think it feels like what's going to happen is that at some point we're going to break this range and give a pretty strong move. It could go either way. I'm not saying it has to be down, but it could go either way. All right, starting to get a little bit of a rollover on this MACD, just a little one, nothing major yet. I am still sitting on the 657 puts. Mags is sitting at 1.3 down. Qs are at 0.9 down. NVIDIA is down 1.4%, that is. Okay. All right, little bit of a brighter green on the MACD, but this candle hasn't finished yet. So let's see what we get. All right, a little bouncy bounce. All right, there we go. There's a move. Okay, can we get behind this move? Let's see. If we jumped on a call, it would be a 657. Let's see if we can get behind this. Break of the VWAP. Kind of bouncy here, big volume. To the moon, you think, Roger? I don't know, maybe. Actually in puts. Okay. All right, Roger. Good luck on those. So getting a little slow down here at the VWAP. Let's see if it can push. No trade for me just yet. And we're coming up to the end of the stream. So let's talk about what the rest of the trading day might look like. This is the range. This is a football. This is the range. Pretty clear range. I feel pretty confident that we're going to break out of this range at some point today. We do have lower targets, pretty low below us, but we also have some targets overhead, the 200 and the gap fill. So I am open to puts and calls in both directions. And I'm using the VWAP, being very, very cautious today. As I said earlier, I'm not taking large positions. I am taking small positions, and I'm okay with that today. So that is my kind of overview for today. I'll be watching the VWAP, puts below, calls above, although sometimes that's more of a guideline than a rule. I'm watching the range. I'm watching the lower targets and the upper targets, and I'm going to be playing in both directions. So that's kind of where I'm sitting today, and I'm careful, as you can see, very cautious. We took a nice 10% win today, so that was fun. And we will be back again tomorrow at 11 a.m. Eastern. And I think we have data tomorrow. Hold on. I think we definitely have options expiration, but I think we also have data. Nope, I'm lying. We don't have any real data tomorrow, but we do have options expiration. So again, that can move us today. It can move us tomorrow, either one. All right, guys. Let's see. Roger's saying blowing up global oil fields, oil greater than 100, inflation, jobless. Yeah, no, I'm with you, Roger. It's not a good look. 36 trillion in debt, doubled in a year with no end in sight. No, you're exactly right. Not learning from the ancient civilizations of Rome and also Germany and Japan, currently doing some hard things to their economy. No, I'm going to go look at it right now, Roger. All right, guys. I appreciate you so much. We'll be back. Thanks for trading with me. Glad we got that little win. We'll be back again tomorrow at 11 a.m. Eastern. Everybody take care. Bye for now.